They have a game plan right now, which is that they'll probably start tightening around mid-year if their economic projections go along with the plan.
Okay, we're going to let Michael in. Michael Tyler. What's your middle name, Michael?
Aaron.
But I'm sorry?
Aaron.
Michael, Aaron, Tyler. So you got three of them, basically. Three. It could be Tyler, Aaron, Michael. Could be Michael, Tyler, Aaron. It could be any of those, right?
Well, if you want to be confused, sure.
I don't want to be. It just happens to be the case. Anyway, have you been listening? Were you able to hear this discussion? Is it good for the markets at this point? I don't know. We don't know whether good news is bad news anymore or bad news is good news. So they're staying out.
No, good. Good news is good news. And what the Fed said, they did keep this considerable time language. But one of the subtleties is that they pinned it to the end of the bond buying program, meaning considerable time from 2 months ago. So we're actually closer than people may have expected to the first hike. And I think markets are correctly reasoning that that means that the economy is tracking along quite well and is quite strong here. So if you got a strong dollar and no inflation, there's no reason for the Fed to act right now. Certainly with the Swiss bank cutting rates even further and the ECB trying to push rates down, the Fed has no incentive at all to move too quickly. But at the same time, I think they're cognizant that they have to move sooner or later or the economy can get overheated. That does suggest a April to June timeframe.
Yeah, there are some external things that are different than any time before, like, Spanish and Italian yields are still below ours, which makes no sense. You got oil, which gives them cover. And I guess they figure if low interest rates or zero interest rates do anything at all to help the economy is not where we want it to be in terms of 4 or 5%. So if there's any help at all and there's no negative consequences, why not leave it where it is? That's sort of where they are.
I think so. They don't want to be accused of causing the next recession. So they're going to be, I think, more reluctant to move and to wait it out.
But
and right now, that seems to be the right strategy.
They also seem to feel 700 Dow points. I don't know whether they do. Maybe it's in my own head. But they actually seem to go, oh no, it looks like the market's down. We've worked so hard to get it up to 18,000. Now it's come down a little. That's not true, is it? I mean, they're not watching. But she was watching biotech
sure they're
stocks.
aware
She thought they were expensive. What's that?
No, I'm sure they're aware of what markets are doing in response to what they say. But at the same time, when the economy was in the tank, they needed to push stock market and bond market prices higher as a way of stimulating the economy. That's not true anymore. So I think they should be less worried about market reaction than they were in the past. And I think the market's reaction yesterday and this morning is telling them that they have permission to go ahead with a mid-year hike.
Okay. Do either one of you gentlemen think that the whole oil story is demand, not supply, or is it supply, Jim?
I think it's primarily supply.
80%?
It's hard to put a number on it. That seems, I wouldn't argue with that.
Yeah, Michael?
I agree. I mean, China is slowing, but it's still positive. We're still positive. Europe is the only place that's really, really weak in terms of oil demand. But our supply is just through the roof strong right now, and that's what's causing the price to be down. Right now, the Saudis are simply waiting us out and seeing how low a price can go until market forces intervene and U.S. operators say, prices are too low. I'm going to slow down my construction and my drilling.
Well, that's what you finally come to. You can use technicals and say, wow, everybody's bullish and, nobody's worried. And then you got cash and it's like you're looking around like, I have cash. Where does it go? Then all of a sudden the market starts going, everybody else is starting to make money again. But there's nowhere else. And unless the markets go down, there's no reason to be sitting in cash. That's the only time cash is good.
Right.
So I don't know. With no alternatives, it can go up even though everyone's bullish, can it?
It's not just,
sure,
yeah, but it's not just that there's no alternative.
What?
It's that the market is not expensive.
You can buy, you can buy some emerging market debt.
You can buy a lot of things, but look at 1998. A lot of people are comparing the current situation to then because of what happened in Russia at the time. The market then was at 27 times. Today it's at 16 times. That's a huge difference.
Okay. Michael, right? Michael, and
yes,
you go with Michael today.
It.
Okay, going with Michael today.
Yes.
Fine. Let us know next time. You could get booked every week as a totally different person. Jim, thank you for being on as well.
Plus his initials are MAT, which is a fourth name.
Yes, that's a fourth name. You can call me Ray, or you can call, oh, I have to read this. Coming up, a live report from Havana. Did you see one of the nightly news guys got down there?